What is up, everybody? Welcome back to the show. My name is Ansel Lindner. This is Bitcoin and Markets. A little bit slower day on the news cycle in Bitcoin, but we have some stuff to talk about. We are going to talk about Chinese demand, growing Chinese demand. I think that's the biggest story out there today for Bitcoin, demand for Bitcoin. And then talk about US GDP numbers. They beat expectations. We'll look through that. I wanted to look through the charts a little bit, look at the Bitcoin chart, look at the commodities. You know, on this show, we talk a lot about global markets and really concentrating on the big things like the stock market in general, S&P 500, the oil market, the dollar, Bitcoin, gold, like these big things. So we will run through some of those charts here today. What else do I have on the list? And if we have time, I wanted to talk through a tweet from a .eth person that I did respond to and see what we can learn from that. I think there's a lot of kind of maybe not panic, but frustration building in the Ethereum community. And so we're going to talk through that. All right, now, where am I going first? Let's share the screen. And where do I want to go first? Let's go to this one. So this morning, this ran across my feed. If you guys don't follow this account, I recommend doing that. It's Sino_market. And they said, oh, China suspends purchases of NASDAQ 100 ETF and the S&P 500 ETF as of January 24th, so yesterday. According to the fund manager, the decision is aimed at protecting the interests of fund shareholders and ensuring the operation of the funds. And they quote tweeted themselves, the ETFs run by Chinese investors continues on Tuesday. eFund MSCI US 50 ETF opens with a 10% limit up at a 21% premium. And the China AMC Nikkei ETF rises over 6%. So they didn't limit up, but it rose over 6%. And its premium is 22% above premium. So there is a huge flow of money trying to get out of China. Of course, we've talked about this recently on the podcast, and I've written about it on my different newsletters. There is a big stock market collapse happening over there. You know, this is on the heels of this slow motion default on the real estate market for the last several years. The Chinese economic model is ending or has ended. They're just coming to reality with that. And there's lots of money trying to flee out of China, but the doors are being barred. Okay. They're suspending trading on this because it was limit up on these US ETFs traded over there in Chinese markets. So anyway, that's what I wrote about today for Bitcoin Magazine Pro. Let me pull that up. So Bitcoin Magazine Pro, here is the latest. China emerging as surprising source of Bitcoin demand. Talk about the stock market going down, talk about this tweet, and talk about how that is moving into the Bitcoin market. So let's go to the next story. I did share that initial tweet with Telegram, and I said, when will they find out it's, you know, Bitcoin can be used for this? And of course, not 5 minutes later, I saw this headline: bruised by stock market, Chinese rush into banned Bitcoin. Let's read a little bit of this. Dylan Run, a Shanghai-based finance sector executive, started moving a bit of his money into Bitcoin in early 2023 when he realized that the Chinese economy and its stock markets were going downhill. Bitcoin trading and mining has been banned in China since 2021. Run used bank cards issued by small rural commercial banks to buy Bitcoin through gray market dealers and capped each transaction at 50,000 yuan, or that's around $7,000, to escape scrutiny. Bitcoin is a safe haven like gold, says Run. That is very interesting. So this is a guy in China, you know, it's a Chinese person, a Chinese bank executive, right? Is that what they said he was? Shanghai-based finance sector executive. And he's saying Bitcoin is a safe haven like gold. I mean, that's pretty huge. The last iteration of China's obsession with Bitcoin was, I think, it came on the heels of there. Remember the was it ghost companies or fake companies? There was some scheme that was going on in China around like 2015, 2014, 2015, and they were pretty much just these fake companies. And then all these like short seller investigative investors from the United States would go over there and they would scope out these places that said they were these big companies, like a multi-million dollar company, and then they would scope out the place, and there was like one dude, one janitor. So they were just they were just scams, right? Well, on the heels, then that got shut down. Sorry, my dog's seeing something. Then on the heels of that was the ICO boom. So I think that the Chinese investors kind of went from those fake companies into ICOs, which are fake crypto, right? Fake crypto. And that pumped up the crypto market. And so a lot of that, I think, led to China's involvement the first time. And then, of course, they had got banned. I mean, there was a lot of legitimate use of Bitcoin as well over there, but then Bitcoin got banned, Bitcoin mining got banned, and it wasn't banned completely. It was just banned like the banks couldn't interact with it. And so that effectively cut a lot of people off. And like this says, this article is saying that you had to go through gray market dealers and you have to cap your transaction limits and things. But that's not that bad. I mean, 7,000. What is it in Europe? Like you can't do a transaction over $3,000 cash, right? Something like that. So, or 3,000 euros. But anyway, okay, so he now owns roughly 1 million yuan worth of Bitcoin, accounting for half of his investment portfolio compared to just 40% in Chinese equities. His Bitcoin investments are up 45%. The Chinese stock market, meanwhile, has been sinking for 3 years. Like Run, more and more Chinese investors are using creative ways to own Bitcoin and Bitcoin, that they believe are safer than investing in crumbling stock and property markets at home. They operate in gray areas. While cryptocurrency is banned in mainland China and there are strict controls on capital movements across the border, people are still able to trade Bitcoin on exchanges such as OKX and Binance or through other over-the-counter channels. Mainland investors can also open overseas bank accounts to buy Bitcoin. After Hong Kong's open endorsement of digital assets last year, Chinese citizens are also using their 50,000 annual Forex purchase quotas to move money into Bitcoin in the territory, Bitcoin accounts in the territory. Under Chinese rules, the money can only be used for purposes such as overseas travel or education. China's economic downturn has made investment in the mainland risky, uncertain, and disappointing. So people are looking to allocate assets offshore, said a senior executive of a Hong Kong-based exchange, Bitcoin exchange, who declined to be identified due to the sensitivity of the topic. Bitcoin and crypto assets, missed that one. I try to leave out crypto. Bitcoin has attracted such investors, he said. Almost every day we see mainland investors coming into this market. As retail investors make a dash for Bitcoin, China's brokers and other financial institutions aren't far behind. Starved of growth opportunities at home, many of them are exploring Bitcoin-related businesses in Hong Kong. So this is the idea that there are green shoots in the parallel economy. So Bitcoin is kind of like a parallel economy where businesses around Bitcoin, using Bitcoin, are somehow involved with Bitcoin, whether it's Bitcoin mining or exchanges or wallets, or maybe just coding. You code libraries to integrate Lightning into games or something. Whatever the case is, but your business is around Bitcoin. That's where the green shoots are. And this is being increasingly noticed, as this article shows. If you are a Chinese brokerage facing a sluggish stock market, weak demand for IPOs, and shrinkage in other businesses, you need a growth story to tell your shareholders and the board, said the exchange executive. Hong Kong subsidiaries of Bank of China, China Asset Management, AMC, that's what we just read a tweet about that, and Harvest Fund Management Co. are all exploring businesses in the territory that deal with Bitcoin. Access to Bitcoin isn't that difficult on the mainland, according to a Reuters check of online Bitcoin exchanges and interviews with retail investors. Exchanges such as OKX and Binance still offer trading services for Chinese investors and guide them to use fintech platforms such as Ant Group's Alipay or Tencent's WeChat Pay to convert yuan into stablecoins with dealers to trade Bitcoin. OKX and Binance did not reply to Reuters' request for comment. Bitcoin data platform Coin Analysis says Bitcoin related activities in China have bounced, and its global ranking in terms of peer-to-peer trade volume jumped to the 13th place in 2023 from 144th in 2022. So, and that's 2023, 13th place. The last half of the year was higher than the first half, and the last quarter was higher than the third quarter. So, like by now, if you just take like a 1 month annualized, I bet they are way above 13th place. And there is a lot of demand for this. The Chinese markets are falling apart. They're fleeing into ETFs that are just US stocks at a 22% premium. There's so much demand to get the heck out of the yuan and get the heck out of Chinese denominated assets or Chinese based assets. Despite being banned, the Chinese Bitcoin market recorded an estimated $86 billion in raw transaction volume between July 2022 and June of 2023, dwarfing Hong Kong, which witnessed a $64 billion in Bitcoin trading, Coin Analysis said. And the proportion of large retail transactions of $10,000 to $1 million is nearly twice the global average. So see, that's that big money trying to get out, right? Much of China's Bitcoin activity takes place through over-the-counter or through informal gray market peer-to-peer businesses, Chain Analysis said in the report. Brick and mortar Bitcoin exchange stores have sprouted in Hong Kong's busy business and shopping streets. These offline shops are lightly regulated. This surprised me that there are just booths, I guess, small shops you can go in and trade Bitcoin. And that they're being lightly regulated. That is very surprising to me. At Crypto Hong Kong, a popular crypto store in the Admiralty District, customers can buy Bitcoin with a minimum of $500 Hong Kong dollars and are not required to provide any identity documents. Wow, that's also better than the United States, isn't it? The underground Bitcoin market in China is thriving. Michael Wang, a dealer who helps individuals buy digital assets, says daily volumes run into several million yuan or even dozens of millions. And remember, there's about 7 yuan per dollar. So 7 million yuan would be $1 million. And that is just him, an individual dealer. One dealer does up to $1 million in daily volumes. That's huge. Charlie Wong, a 35-year-old buy-side equity analyst, bought Bitcoin via the Hashkey exchange, an officially recognized marketplace in Hong Kong. So see, this says bought Bitcoin, which is interesting. Every time they talk about buying or selling or whatever, and they name it, it's going to be Bitcoin. It's never going to be, he bought Ethereum via the Hashkey exchange. No, they're always going to be buying Bitcoin or cryptocurrencies because they don't buy anything else. They're trying to lump Bitcoin, of course, in with shitty crypto. Okay, quote, "It is hard to find opportunities in traditional fields. Chinese stocks and other assets perform poorly. The economy is undergoing a crucial transition," he said. This is interesting. So this is like common knowledge, but a lot of people still don't know this in Bitcoin and in the US and even in macro circles. People are very slow to admit that China's economic model is over and they're going through a crucial transition. China's crackdown on the property sector over the past 3 years has battered prices of homes, which were traditionally the mainstay in household savings portfolios. The stock market has fared even worse, with the benchmark CSI 300 index down by half its value since 2021. US investors don't understand what that means. S&P 500 has returned like 9% on average in its history. Anyway, Bitcoin, by contrast, has leapt 50% since mid-October and is known for its wild swings. Wang believes Chinese officials are cognizant of how disruptive Bitcoin can be, and yet aware of its huge potential, and hence their endorsement of Bitcoin trading in Hong Kong to keep a toehold in the Bitcoin business booming in financial centers such as Singapore and New York. Well, it's not really booming all that much in New York. I would put Texas here. Anyways, so this is interesting. He's saying that they're aware that it's being done, but they don't want to crack down on it because they don't want to lose market share, right? They don't want to lose out on the possibility that it is really something. And that's what I've been saying since back on FedWatch when we were talking about Hong Kong and opening back up to Bitcoin business. Because they've been just lockstep behind the SEC. When the SEC does something, they approve it too, And so I think they are either just about to approve spot Bitcoin ETFs over there, or they have already approved them right in lockstep with the United States. So, this is very interesting. Hong Kong, though autonomously governed, is a Chinese special administrative region. Chain analysis reckons the developments, quote, have created speculation that the Chinese government may be warming to Bitcoin and that Hong Kong may be a testing ground for these efforts. And I do agree with that. So that's a pretty cool article. Again, I shared that on Telegram this morning. So what the main takeaway here is this is a huge new source of demand for Bitcoin. Just in time with the US spot Bitcoin ETFs. And now China is wanting to, ape into Bitcoin. These sophisticated investors will be able to buy the Bitcoin spot ETFs, or there probably will be a derivative product on their exchanges. So they are going to be able to get, it's like a synergistic thing happening here. The US approves these spot Bitcoin ETFs. China really wants Bitcoin, and they really want US based assets. So this is just a perfect confluence of events that could really supercharge this whole Bitcoin demand and this whole Bitcoin bull cycle. All right, speaking of the bull cycle and price, let's read this tweet before we get into the charts. So just in, JP Morgan and their CEO, Jamie Dimon, who is Epstein's banker, right, says profit taking on GBTC has largely concluded, expecting limited further downside for Bitcoin. That's very interesting. We've been seeing a ton of outflows from GBTC, enough to tip the net on the daily net negative. Now, there can be some funny business going on because we don't know exactly who's reporting what on what day. Are they, is GBTC reporting at T+1? We think that's what the case is because we can see the on-chain data is matching up basically a T+1 schedule. But what are the inflows from all the other guys? Are they reporting it exactly T+1? Are they reporting T+2? Are they reporting T+0? Because they come out with data every evening. Like what's matching up? We don't know 100%, but it's getting better. And as we go forward, these flows will stabilize more. So anyways, I think it has been about even, but slightly net positive. There's been slightly more net inflows than outflows, something like 20,000 Bitcoins or something like that. But overall, the new ETFs, not excluding GBTC, they're up over 125,000 Bitcoins. Most of that coming from GBTC, though. So, anyways, if they're selling profit taking on GBTC is largely included, we yeah, that's going to basically lock in that low and we'll be going up because there will be a ton of net buying instead of net selling. Okay, let's go into the chart. So here we got Bitcoin. Well, this is the hourly. Let's go to the daily, check it out. A little bit red on the day, but nothing too bad. Let me bring up the moving averages because I thought this was kind of interesting. So the 100-day moving average has really acted as support. And there's this other line. If I can pull this up, if I can find this other line. Oh boy. Oh boy. Where is it? That's not it. It. Oh, great. This one. No. It's got to be this one. Huh. Anyway, I'll just draw a new line right here. And that's this top that we are looking at all through November. That is a horizontal support. We're at the 100-day. If we do sell off, dip here one final time, I think we won't close below this line. Of course, anything's possible, but there's so much going on with Bitcoin. So much stuff is coming to a head in the next 2 months that I just don't see how Bitcoin can go below that line and close below that line. We can always wick down there, but I don't think we close the day below that line. So, in other words, this is a really good buying opportunity if that is the case. Not financial advice, of course, but DCAing is the best possible thing and buying on the dip. So when you see Bitcoin pulling back, if you're new to Bitcoin and you're thinking, oh, I want to time my next buy or whatever. So, I mean, just a general rule of thumb, when Bitcoin goes down 20%, that's going to be a good buying opportunity. And we are down 20% from the highs. So anyways, okay, that's the Bitcoin chart. Let's get into some more macro stuff. We have, what should we go to? The dollar. Not too exciting. I mean, it's holding gains. You kind of stepwise up here. Let's take a look at RSI, not oversold. This could go higher. We kind of have some inverted head and shoulders, and it's not perfect on the RSI, but it does look pretty good here if that can move up. If we zoom out a little bit, once again, for people that are new finding the show, I was pretty much the only Bitcoiner that was. Oh, wait. I hope you guys have the right thing. I was pretty much the only Bitcoiner this whole cycle since COVID calling for a stronger dollar. And, down here, people were like, oh, look, the dollar's going to die. And then all of a sudden we have the dollar wrecking ball going all the way up here. I called pretty close to the top. I think I called 112 as being the top, and it got all the way to 114, but that's pretty close. And then I said we're going to enter a range. I said we're going to be range bound. I thought it would be higher than this, like the range would be up here, but it is a range. It's been range bound now for over a year, and I expect that to continue. All right, that's the dollar. The dollar is not in any threat of going away. I had a tweet today. Let's see if I can find that real quick. Profile. And I think this is kind of important. So hyper-Bitcoinization does not equal de-dollarization. The dollar is not going to go away. This current version of the dollar will go away. But the dollar has been different many different times throughout the history of the United States. Okay? It's changed a lot. And this current incarnation of the dollar is going away. But I say it can be Bitcoinized. So hyper-Bitcoinization is going to be also the hyper-Bitcoinization of the dollar itself. So anyway, that's that. Where am I at? So that's the dollar. It's not going anywhere. All this BRICS stuff is crazy. That I saw some people talking about this on Twitter, that the new BRICS bank, uh, they hold their assets in dollars and they denominate their accounts in dollars. They're not de-dollarizing anything. It's a complete joke. It would be like, let's get Venezuela and Argentina together, and since they're so great at running their own currencies, but together they're magically going to become a better currency. No, I mean, just look at these countries that are in BRICS. Brazil, not known for managing its currency very well. Russia, same thing. India, probably the best out of the bunch. South Africa, not bad, but China, uh, not in the top tier. So like you're hobbling together all of these subpar countries, and they're gonna create a currency, and it's gonna be very good. No, they're gonna hold dollars. They're gonna denominate it in dollars. The dollar isn't going anywhere. It will be Bitcoinized. That's what's gonna happen. All right, how about gold? Gold is kind of boring. Hasn't really done anything since this long wick up to the all-time high up here, 2150-ish, 2145. I don't watch gold very often because it goes up 1%, and where Bitcoin goes up 10%. It's just not exciting. And if it still had its monetary role, then it would we could use the gold chart to predict more things. But it's just not that central to anything anymore. It's losing its monetary premium to Bitcoin. And so it's just not very valuable to look at the gold chart, to be honest with you. Okay. How about oil? Oil making a little push here. This is the daily chart. I wouldn't, I'm not surprised if it goes higher, but I'm long term, it's going lower. Okay. See that OPEC has nearly 6 million barrels per day of excess capacity. The US is increasing their capacity. And it's when Trump gets elected, his first thing in office, he said he's going to do drill, baby, drill. The future path of oil is lower, not higher. It can go marginally higher. I mean, if Saudi Arabia gets bombed or something, yeah, oil is going to spike, but it's eventually going to turn around. And this is another thing too. Okay, as oil goes higher, that causes more economic pain, which has a recession as a result. So higher oil prices just lock in lower oil prices in the future because demand's going to go down. That's the problem here with the OPEC cuts. They are just making recession more likely and making lower demand in the future more likely. If they let prices fall, the economy would have more disposable income that they're not having to spend on energy, and they could spend it elsewhere in the economy and grow. But if you keep prices artificially high, you lock in lower economic activity. So that's what's happening here. The excess capacity should be like, how badly are they causing a recession? How much weight are they putting behind this recession? They're putting 6 million barrels per day of weight behind this global recession right now. So it's coming. All right, how about stocks? S&P 500 did not make a new all-time high today, but it was green on the day. If we zoom out here on the weekly, you can start seeing my arrow path here. I do think that we are going to rally for the first half of the year. This is a pre-recession trade, okay? So money is not being invested in productive uses. It's going towards financial assets. It's going into savings, into your 401ks. You're maxing out contributions on everything. You're buying more mutual funds. You're saving because you feel the rainy day ahead and you don't want to expand your business or do something more risky investments. So that's why stocks are doing this. And I've said in the past that will benefit the larger stocks. That's why we see the Magnificent Seven outperforming, not because of hysteria, not because of inflation, not because of all this other stuff. It's because they are seen as a safer investment. And as they make up a larger percentage of the market and people buy market funds, like you just buy SPY or you buy, whatever, just a complete index fund, 30% of that's going to the Magnificent Seven, or maybe it's 40 now. So they get benefit from being a larger component, and it just compounds on itself. So that's what we should expect. Stocks will continue. I mean, they will have down weeks. We shouldn't expect every week to be green, but overall, the trajectory over the next 6 months is going to be higher, most likely. All right. And how about US 10-year? Let's go to the daily. So it looks like it could be topping out here a little bit. Everybody, was talking about the GDP, which we're going to cover here in a second. This wedge, wedges usually break this way. So everyone's talking about the GDP number. So let's get into that. And then maybe I will come back to this chart in particular. So, all right. Here's the first tweet that I saw this morning when I opened up Twitter, and that was US GDP annualized. So Q4 GDP rose at an annualized rate of 3.3%. And that is not before the revisions, okay? GDP usually gets revised 3 times. This is the first draft, and so that's possible that it gets revised down significantly. I mean, it could go down to probably not 2.5%, but it could go down to 2.8% or something, but that's still a pretty big number here. It was estimated to be only 2%. It is down quarter over quarter from 4.9%. Core PCE, now this is what they use to get real GDP. So remember the difference between nominal and real. Nominal is the bare bones number, but once you subtract out inflation, then you get real GDP. And the inflation that they use, they don't use CPI, they use core PCE. That is the deflator for GDP to get real GDP. And that came in at 2%. It was estimated 2%, and it was 2% last quarter. Very interesting. Personal consumption in the fourth quarter was up 2.8%, was estimated to be up 2.5%. Not as good as Q3 either. And that's not good. Maybe this is seasonally adjusted because, Q4 should be very high personal consumption with the holidays. GDP price index, 1.5%, estimated at 2.2 and previously 3.3. So these ones are kind of blah. The big number right here is the GDP annualized fourth quarter was 3.3%. That is just absolutely gigantic. Let's go to the the BEA website. And this is where you get the press releases for. It's bea.gov to get their news release. All right, so let's read what they have to say. Can I zoom in here and make this a little bit easier to see? Real GDP increased at an annual rate of 3.3% in the fourth quarter, according to advanced estimates released by the Bureau of Economic Analysis. In the third quarter, real GDP increased 4.9%. So I wish we could have a chart here that does not have COVID, because that just makes it harder to see. But you can tell that this Q4 was lower than Q3, but better than Q1 or Q2. Overall, though, low growth. And we're going back into low inflation. Okay, let's go back here. So GDP estimate released today is based on source data that are incomplete or subject to further revisions. Like I said, they usually get revised 3 times, and I believe those come in consecutive months, but I could be wrong about that. It's not consecutive quarters, but it's like by the next quarter, they will be on their third revision for the previous quarter. You know what I mean? Okay. Increase in real GDP reflected increase in consumer spending, exports, state and local government spending, non-residential fixed investment, federal government spending, private inventory investment, and residential fixed investment. Imports, which are a subtraction in the GDP calculation, increased. Okay. Increase in consumer spending reflected increase in both services and goods. Within services, the leading contributors were food services and accommodations, as well as healthcare. Within goods, the leading contributors to the increase were other non durable goods, led by pharmaceutical products, and recreational goods and vehicles, led by computer software. Within exports, both goods, led by petroleum, and services, led by financial services, increased. The increase in state and local government spending primarily reflected increases in compensation of state and local government employees and investment structures, blah, 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 blah. Okay. I think we covered that enough. But now let's go back to the 10-year. And what this is going to do, what the GDP is going to do, it's came in hot, right? And so people are going to be, oh, soft landing, soft landing, soft landing. But don't bite off on that. Don't bite off on that. If we have a soft landing, we will get highs up here, back up near 5% on the 10-year. This right here will tell you if we're going to have a soft landing or a hard landing. Because as rates rise, that means money is loose and money is flowing through the economy, and there is actually real growth and real stuff going on. But if rates are falling, it means opposite. So watch the 10-year. It will tell you whether we're going to have a soft landing or not. And I'm expecting it's, people are going to bite off on this. They're going to say, hey, Powell, next week, he's not going to cut rates. There is a chance. I think the market is pricing in like a 1% chance or 2% chance that he cuts rates next week. I think it's higher than that. Maybe a 25% chance. We'll see. But I do think he will probably be cutting in March because the economy is going to deteriorate pretty rapidly. Plus, we have the end of Q1 banking pinch that we always have at the end of Q1. So all that's coming in together in March, and Powell is smart enough to sympathetically cut, I believe. So anyway, what else do we have? Let's see, what time is it? 5:20. I'm going to save that ETH tweet for the next live stream, and I'm going to check the comments here. Dex Invictus. I was one of the only ones that said Jay Powell was a straight shooter. Yeah, thanks. CK and I watched him. We just got it right from the horse's mouth, and we didn't listen to the talking head macro folks that tell you how evil Jay Powell is and how evil these guys are. Okay. I think that I don't like central banks, but there's a difference between saying that this is wrong, it's not functioning well, it should go away, than saying these guys are evil banksters, right? And Jay Powell, I mean, when you look at Bernanke, though, it's hard not to say that he was an evil bankster. And Yellen, oh my gosh, she's doing bad stuff still. But Jay Powell, yeah, he's been a straight shooter the whole time. Then some Bitcoiners called you a status cut. Was that on the comments to FedWatch? I mean, you get that all the time. People, they're stuck in their thing. And I mean, I would never call somebody that, but I would have fiercely disagreed with myself if you rewind the clock 10 years ago. I remember the first time I heard Jeff Schneider. I was mowing the lawn, listening to a podcast, Macro Voices, and I heard Jeff Schneider talking about this stuff, and I got a visceral reaction to it. I could not handle it. I totally triggered me. It was man, was that around? That was probably around the same time that I was listening heavily to Bitcoin Uncensored. Remember that podcast with John Seth and Chris DeRose? I might have the years a little bit off, but it was rough around the same time. Okay. So John Seth and Chris are making me question myself about my understanding of economics. And I have a degree in economics. So, I should know this stuff and be fairly confident. And that reminds me, the definition of an expert is somebody that's more likely to be right. Okay. So anyway, so I'm listening to John Seth and Krista Rose, and then we also have Jeff Schneider triggering me. So that's how I started questioning my assumptions. And yeah, I would have been really completely 180 from where I am today 10 years ago. All right. Let me check Telegram, see if there's any comments there. Checking the post for this live stream. No comments in here. Okay. Well, let me bring up the website here real quick. And stand by. This is bitcoinandmarkets.com. It's where I put out all my stuff. You can sign up for a free weekly newsletter. You can also support my content. You can sign up for the paid newsletter that comes out once a week, talking in-depth dive into all the stuff I talk about here. And last but not least, bmpro.substack.com, and check out all the stuff there. I appreciate you guys hanging out with me today, and I'll see you on the next one. Bye.